You're looking at your trading candidates first thing in the morning, and up pops Mobileye, MBLY, as a Baltimore Chop setup, and it's a beautiful trapdoor. And then, it's only $13.60 from the entry. And where's that put me in terms of a profit target? Low dollar stocks can be a problem. Low dollar stocks, everybody just looks at these and says, there's probably nothing on it. I probably don't have the opportunity here to make money. You do your fib study and you say, well, peak to trough on this one, I've got a pretty decent profit objective, right around 50 cents per share, and that's okay. That makes for at least a decent move, and it's better than doing nothing at all because nothing else was really scanning up today in terms of trading opportunities. And once Mobileye gets moving, it's obvious it's got the possibility, anyways, of putting in another wide range bar or several wide range bars. That tends to happen when we get a really big move on an opening bar like this one. But how do we anticipate where the thing's going to go? Big move on that first bar. Big move on the second and third bar. And in the room today, if you joined us in the war room, you heard Julie talking about trailing down, getting that stop down and just following Mobileye as price was moving lower, figuring out what we're going to do in terms of a trailing profit stop instead of a trailing stop loss. Coming down, coming down, coming down. If you think about your boot camp materials and you think through some of the strategies that we had in there for how you can close out a trade when it's deep in the money, how do you figure out on a parabolic move? Sure, you can do a parabolic support and resistance, a parabolic SAR. There's a lot of things you can do. But one of the simplest is a reversal of two closing prices, and that's exactly what got Julie out of this trade today. Right here, you see a bar that comes up, reverses this 1241 close, and reverses the close just before it. And that tells you that right in here, around $12.50, you have the opportunity to lock in a pretty big profit. So now you've got over $1 per share traded on a $13 stock. That's almost unheard of. But if you use the reversal of two closes and you use that pivot line, that pivot resistance line from today, that's R2. And as it's moving up to R2, you've got some thinking to do. Well, do I really want to get out exactly at the reversal of those two closes? It's only about 5-6 cents between the reversal of the prior close and that close before that and where that pivot line is. And, well, I'm going to give it a little bit further. I'm going to give it up through that pivot line, and let's just see what happens. And even though it wound up coming up and reversing again, the logic behind the exit was perfect. It reversed 1, 2, 3 closes by the time it got up through here. And when it tested these levels out over here, they're not so defined right now, but when it tested this volume by price here, it really had the opportunity to shoot up through there. And we didn't know at the time that it was going to hit this threshold level and just bump back down. Only went about another 20 cents. So we locked in the meat of the move, and we had a really good setup in a cheap stock. Made sense. The entry was very, very logical, right from the boot camp materials, right from my Baltimore Chop 2 standard deviation opening gap mastery class. Everything about this trade was picture perfect. The only thing that would have put you off was the price. And in the end, it sailed to a profit the same way that a stock that costs 10 times as much would. I hope you got this one this morning, and I will see everybody back in the room on Thursday.